Hi guys, I hope you're doing well wherever you are. Rufas, how are you doing?
I'm doing fine. Yeah.
Since the last time we had a conversation, I think sort of the Middle East crisis is, I won't say escalating, but it's on a sort of a stagflation.
Yeah, it's getting worse.
Yes, in terms of course, casualties. We hope everything is resolved. I'm speaking in regards to the markets.
Markets, I think they have been rumbled from last night's speech from Jerome Powell.
Yeah.
And by last night, this was the 1st of November. And the year is ending next month.
Yeah.
So what are your plans?
We are on the Friday of the year, so November is a good month for me. I like it because it allows me to prepare for Santa Rally. And maybe what was your highlight from Powell's speech yesterday?
We are not considering rate cuts anytime.
So the same speech, different dates since the last three FOMC meetings.
Well, there's quite a change
Okay.
in the intonation.
Yeah.
First, he acknowledged that the GDP or economic growth is very strong. The job market is currently also pretty strong.
Yeah.
And of course, housing is resilient. Consumer spending is very high. So he's basically acknowledging that some of these economic data points are not consistent with their expectations. While he may not say it directly, basically means that the Fed is acknowledging that inflation may remain higher for longer. And they are basically waiting to see the full impact of the high interest rates. So they're not jumping into conclusions and going for another rate hike.
So basically, same sentiment, I guess, in terms of rate cuts. I saw early in the morning, Brazil has already started cutting down their rates. So probably by Q2 next year, we should expect the same.
Yeah.
For me, I think I expected that. Of course, a maintaining of the rates, given external factors which are happening, like you said, in the Middle East is already doing its work. The bond yields have already hit their peaks, and they are tightening the economy as it is. And so, at least we should expect maybe. We remember when we say that Nasdaq buy, and then goodbye.
Yes.
So perhaps now we are back into the sort of bullish sort of sentiments in the markets.
No, I think 4 months ago, the Nasdaq hit the highest price in the year. And since then, we have been trading in this channel downwards, where there is upswings, downswing. So this week, we're experiencing these sudden burst of energy. So there's a good upswing, but we have not broken the upper trend line yet.
I think it was this week and last week where most of the Magnificent Seven did report their results, but it didn't really spur price action to the bullish side. Maybe what would you attribute that to? Or is it that the market players already know what is coming, so they are just maybe cashing out before they look for buying it at a cheaper price?
On one side, I would say the AI boom is cooling down.
Okay. Markets
are not reacting to AI stocks and earnings the way they were doing earlier in the year. And then at the same point, Nasdaq managed to hit a 10% drawdown from its recent high, basically meaning that it had officially entered a correction territory. So we saw it happening with the S&P 500, but for the Dow Jones, it didn't quite get to 10%. So as a result of that, there is this overall consensus that the top of the year has already been achieved, and we might not get to that high again. So going forward, I think investors are beginning to think in terms of correction, and of course taking profits ahead of the end of the year.
Yeah. You don't believe this year we will have a Santa Rally where things, or rather stocks, have a sudden price booming?
Even this Santa Rally is not looking very promising.
Okay.
Yeah.
Interesting. Now, as traders, it has been quite an interesting year. And as we circle back to today's topic, it has been an interesting year. A lot of things have happened. Markets have moved to levels sort of expected in the markets, but unexpected in terms of maybe your trading strategy timings. You, as a trader, perhaps as you look to close the year, do you normally trade during December holidays, or you look for December money as early as from Q3 all the way to at least early December?
Well, as we approach November, I tend to think of it as no shave November. And in this case, I don't want to shave my portfolio. So this is when a majority of traders will make mistakes.
Okay.
You haven't hit the goals for the year. You've made some significant profits over the period. And then you get greedy because you want to get that extra percentage and hit your targets. And if you're wrong, you can really erase out of gains.
Yeah.
So it's this period of time where a lot of investors are taking a backseat from risk and trying to secure the profits towards the end of the year. So personally, in December, I usually take a break, especially from around 20th. Then from January, this is when I'm looking at the new trends, new projections, and perhaps we tend to see some good trends beginning from January.
Do you normally look at let's say, how the year closed, especially on the statistical data side? Maybe how the markets closed, I think, around 28th of December before we cross over the year? On a monthly charts.
Definitely. I always look at that number. It's usually very interesting. So markets tends to be unidirectional from January 1st. I remember, was it 2 years ago when the SP 500 hit the highest level towards the end of the year? And then on the first day of trading on that January, it started going down. And then for the rest of the year was downwards.
What would you say maybe was your highlight of the year? I know this year we have had, of course, the NVIDIA hitting the headlines and a few other tech stocks. Perhaps as you close the year, will you still be monitoring how they close the year in terms of their Q3 and Q3 rather earnings, or you'll just be looking at the technical price action compared to the macro factors in the economy?
Well, for NVIDIA, it was quite unbelievable in how it performed early in the year, going up 200%. But then there's some controversies coming up around the way it does its sales, the number of top customers buying from NVIDIA. There's the political intervention where the US government is banning NVIDIA from selling some chips to China. So all that has been quite confusing factors in terms of the outlook for NVIDIA. But then in terms of highlight for the year, I would think the USD JPY has been the top highlight.
Okay.
So if you literally just woke up every day and bought USD JPY and you didn't implement any short selling trades, you would be at profit as at this day.
Okay.
Yeah.
Now, traders, forex traders in general, have various perceptions in the markets, and I think every trader carries themselves differently. Maybe what are some of the best traits you have taken from some of the mentors whom you have sort of interacted with or learned from in regards to this industry?
Well, that's a tough one.
Yeah.
Personally, I don't think I've been following any mentors for the last, 4-5 years.
Yeah. You have been the one doing the mentoring now, eh?
Yes.
Yeah. So how did you, let's say in your formative years, come to do that in a way that you know what you want? It doesn't affect, of course, your day-to-day activities, your maybe your cash crop, of course, and your schedule, perhaps.
So I think the biggest step I've made this year is to learn to be free of the markets. So there are some times that I'll analyze the markets, see some opportunities, and then do a wider scale analysis. And if I feel the markets are just ranging or not doing anything, then I'll happily stay off the markets until there's an actual position that presents a better opportunity with a lower risk profile.
Yeah.
So I find that kind of freeing instead of having to look for an opportunity each and every day. So sometimes I'll just analyze and I'll say, there's nothing in this market. Let's just wait a couple of days or just one more day and see what happens.
Interesting. This industry has different personalities, I believe, yeah?
Yes.
First of all, there are those who are risk-averse, prefer to, like yourself, just enter the market when you see a clear opportunity that you can cash out.
I'm a risk seeker.
Sorry.
Yeah.
And then there are those not risk seekers, but they thrive on volatile markets, extremely volatile market. That is like their adrenaline shot. Yeah.
Yes.
Like I'll give you a contrast. This week there are those people who technically don't trade.
Yes.
This is the first end week of the month. They do not touch the market whatsoever.
Yes.
For their own personal discipline and strategy.
Yes.
And then there are those, this is the time when they have the loaded account.
Yes.
They will focus on this week, and they will focus on only particular timings in the markets, 3:30 p.m. Kenyan time, perhaps 9 p.m. because of the FOMC, perhaps 5 p.m. maybe due to JOLTS numbers or EIA oil production numbers. That volatility is what drives them. So maybe how long did it take you to say, okay, so this is how I'll plan myself in a way that once in a while, I myself do this. Once in a while, I do take part in that because it is exciting just to know, be in the middle of it, scalping and doing everything. How did you come about to now say, okay, this is what I'll be focusing on and planning myself?
Well, I think the biggest guide has been losses. So
yes.
Yeah, you find something nice, you touch, you get your fingers burned, and then you learn your lesson. So I've done a lot of those. Maybe there's a big number from, let's say, NFP. I go for a big trade, a big chunk, and then the market goes against me, I get burnt fingers. Then I learn to stay away from that. So for me, instead of trading the big surprises happening in the markets, like a big data surprise, big announcement, I literally started focusing more on price. So when there's a big price movement, then that's a little bit more interesting to me than a big data announcement. So when there's like overextended prices, especially on indices, majors, gold, then that tends to excite me a lot. Yeah. So if an asset, let's say that normally moves 5-6% a month, is now moving 20-30% in a month, then I'm very interested in that particular market because it tends to present better opportunities.
Do you find like trading makes you become like a nerd or above for a lot of data, especially in the financial sector? Like you are always reading from what is happening in Bank of Japan, like China, Bank of Australia, New Zealand, all the way to the Bank of Canada. You find yourself knowing the central bank governors by first name as if you know them.
Well, I think generally speaking, the average Kenyan or East African trader is basically treated as this mysterious figure who, let's say, has some chums, but then we don't exactly know how they make it. So it's even harder for them to explain to other people what they do for a living. So you find that most traders will tend to like water down or narrow down what they do compared to other industries where, let's say, for instance, if you are a lawyer, you want to be addressed as wakili, you want to tell people, this is what I practice, bring me clients. So you keep selling your craft out there. But for the Forex trader, once they have mastered their skill, I've known a lot of traders who tend to keep it at a low. And if you ask them what they do, they'll probably tell you they do online work. So it's quite challenging, especially considering the kind of society we have, where if you suddenly have a lot of money and people are seeing you with some developments happening around, they'll be very quick to judge. He's an online scammer, he's doing wash, but deep down, you know that you have really put some good work in your strategy, your learning, and you're basically enjoying the fruits of your labor.
Isn't it maybe a societal thing whereby we are a conservative society? Show of opulence is not really something, I would not say African, but it is not something that is taken well by other people. If you see on social media, there are people who genuinely maybe run successful businesses, but the moment they start rubbing it on other people's faces, it becomes as if there is something else. It cannot be this one. They start actually doing econometrics of all the numbers of, okay, these are the number of sales you did, these are the expected revenue, less tax, this is what you get. So I think maybe there is obviously that a black, gray line that each person has to maybe toe within to ensure you don't maybe offend the other person. And then there's the other reality
I don't think it's offense. For instance, we always celebrate our politicians. Our politicians will come with a motorcade, giving out money. But nobody ever questions where did they get the money, what business are they involved in. People don't question that. But then when it comes to Forex traders, they are treated differently. And I think one of the factors is because the industry is pretty young in Kenya. So the first broker to be licensed in Kenya was FX Pesa, and that was 5 years ago. So the industry has been there for decades and decades. So if you're in other countries, let's say you're in the UK and you're a forex trader, people completely understand. They know that for this guy, your fortunes can come true, especially if you're a really good trader.
Or
And
it
if
can
you
go to the gods.
So if you're driving a Lambo, nobody cares. They are like, that's a forex trader.
Or a crypto trader.
Yeah. But if you are around here and you're doing a Lambo in Nairobi, then it gets out of people excited.
KRA will be your friend, eh?
Yeah.
You need to
You'll get a couple of visits.
Yeah. Definitely. Saying that they say that it's only more sadly in Africa where you find that entrepreneurs walk by foot and the politicians fly by choppers to everywhere. You will not know who is the value creator and who is the policy maker if you brought those two on a room.
Definitely. There's also this other issue that since forex market is deemed as this place where you can easily gain a lot of money, which is not true. It takes a lot of hard work and determination, discipline, and all that. So there's come this breed of course, scammers in the market who are trying to take advantage of people who don't understand the industry. So in that case, they will, let's say, literally pose, like that high living, driving like good cars, doing stuff. And that can be quite a bad image for the bigger part of the market where people are genuinely trading and they're not scamming people, they're just working to improve their financial status or to achieve financial freedom.
To be the devil's advocate,
Yeah.
Everyone lives their lives differently.
Yeah.
So perhaps I think someone like Elon Musk,
Yeah.
he would tweet something. Like recently, he tweeted that he would pay $1 billion to somebody like not to somebody,
Zuckerberg.
to pay Zuckerberg to change his name.
Yeah.
And then there are the US rappers. If you are a hip hop fan, you know people like Rose or hip hop generally.
Yeah.
It's more about show of opulence. Somebody has done one album, made $1 million from shows, and he will not hold it back.
Yes.
He will go to Katia, he will go to Piguet, he will go to Jacob and Company, and he will get the best of the $200K USD to, quality, original, diamond crusted and everything.
Yes.
And they will not hold it back. So I think it boils down for me to the society, how they view. For them, buying big chains and golden necklaces, it's a show of wealth and success and hard work you've put in.
Yeah.
Maybe if you have listened to most of the interviews, then you get to realize, okay, so this is what he did. And then it reaches a point, perhaps, I guess, maybe I'm comparing the two.
Yeah.
If you have watched the latest interview with Jay-Z, he dresses maybe in a sweatpants, simple, maybe 1 or 2 gold chains, and maybe an Apple Watch.
Yeah.
And that is it. And maybe, of course, because he has a deal with Puma. Very simple outlook, but expensive in the bank account. So I guess people are different in how they, of course, carry themselves on social media.
Yes.
I think it boils down to individual capacity. Yes, you want that, but you might want to understand the story behind all perhaps the display of wealth.
Definitely. Being successful in Forex basically makes you like a mental beast. You're literally strong mentally. Mm-hmm. So any kind of criticism, it doesn't worry you a lot. If you can take a 10-20% hit in your trading account, then people talking on social media around is it's a nothing.
Yeah.
So what I would say is if you're doing well and you decide this is the kind of lifestyle you want to take, then keep doing what you're doing.
Remember,
because if you're profitable and you decide to live big, nobody will affect or stop you from being profitable. So you just keep doing your own thing.
So long as you are in good terms with the government authorities and everything, I think that is the most important.
Yes, of course, you could get some guys banging your door.
Yeah.
There's also the issue of the $5 range attack.
Yeah.
If you are basically displaying out there how you are doing, I just made $1 million yesterday, then of course you'll get to attract a lot of other bad people who might be interested in what you're holding in your bag.
Yeah, definitely. So you need to be cautious at how you move,
Yeah.
and of course carry yourself in that regard.
Yeah, risk management doesn't just apply in Forex.
Definitely, it applies in all aspects and spheres of life.
Yeah.
Remember, at least way back early 2010s, when there used to be a lot of conferences, and you would get in there. Maybe you are new to this craft, and you interact with people. You're like, wow.
Yeah.
I think I know nothing. Every time you meet new trader, I think you get to know that you know something, but not what the other person knows.
Yes.
Maybe to new traders, what do you normally, because I know you have been interacting with a lot of them, where and how do you advise them to make sure that they get, let's say, their information and how perhaps they consume and apply it to their own financial journey?
Well, from a personal perspective, back in 2013, 14, 15, when I was just a beginner in trading, we didn't have any local brokers. You would have to like do a wire transfer or Visa MasterCard to a foreign broker, which would take like 5 working days before a deposit is reflected. So when these foreign brokers realized that there's so much potential in Kenya and there's more and more traders depositing, very interested in this sector, they started traveling here. But then, since they didn't have establishments in Kenya, they would organize, let's say, conferences. So they would be looking to achieve very quick results. So they would be like, we are here, we are doing a training, come to this hotel, we are having the conference. You go there, they teach you how to open an account. This is what we call a candlestick. This is how price moves. These are the assets you can trade. And very quickly, they expect you to start trading from right there and then. And that kind of brought a really bad image to Forex trading because people would think that it's something you can do that quickly and then you start making money. But then most of the people would end up losing money in the markets. Yeah, so it was a hard path, and it caused out of a bad image to the industry. But I basically like what we are doing at FX Pesa, where we basically provide clients with the necessary materials, running, time. You get time and a guide. So in terms of the trader's journey, you're not just told to create an account, deposit money, start trading. We are more like create an account, get a demo account, which is a practice account, start learning here. You need to learn introduction, you need to learn risk management, you need to learn, let's say, indicators, fundamental analysis, technical analysis, and all that. So by the time you decide to go for that first deposit, you already know what you are doing, you already know how to manage your risk, you already know the market movements, and of course, we provide additional support in terms of market analysis, market updates. We do market snapshots every day, telling you this is what happened yesterday, this is where the markets are, this is the expectation for the day, which is an added advantage for the beginner trader. So for any beginner trader, I would tell them to think of this as something long-term. So it's not something you're going to do for 3 or 6 months, get money and get out. It's a skill that once you get, you're able to milk money from the markets year in, year out for the next, let's say, 30, 40 years. So in that case, if it's something that you want to be using to earn money over time, why not just invest a couple of weeks, a couple of months to learn, and once you've perfected it, then you will be able to make the right decision.
I think for me, I changed from being obviously it started with I need the money.
Yeah.
It starts with that. You need the money.
Definitely.
You in life they say you either out earn your expenditure or you spend less than you earn.
Yes.
For me, I think the best way was to earn more.
Yeah.
Because with inflation, dollar hitting 150, perhaps by December we'll be talking about 160.
Yeah.
In my case, I was within finance. So where else can I apply all these things I've learned in 4 years in campus that you cannot really, perhaps there is no like specific job for that. But there is this skill, there is the knowledge you have, and then there is this opportunity that you can apply something for it.
Yeah.
Not to say that trading is more finance professionals, but I think I find it non-finance professionals, I think I've said it a lot, we tend to overthink everything because you believe, I know finance, or this is how macros work, and this is how the market will react, but it is irrational, so you just need to understand what the data is giving you and what other traders are doing.
And somehow you couldn't borrow $50,000 from your uncle to start.
Definitely. Yeah, the promise was there, but upon graduation, once you put the gown back to the campus, everybody becomes mteja.
Okay, the contrast I'm trying to bring about is about the journey for a trader in East Africa versus, let's say, a trader in the UK, US, where, let's say, your financial background is completely different. So you find that there are traders who will get the best of learning resources, which are accessible to the average East African. So you go through the learning process, you learn all the basics, you learn a very nice strategy. You are a good trader, you can make 10, 20% in a month. But then when it comes to depositing money and starting your trading journey, let's say you don't have money. Your entire war chest is $100. But then another trader in a different country may be able to borrow their uncle $50,000. And then for them, well, you are looking to make that 10, 20%. Others, mostly in Kenya, are looking to make 100%. This guy is looking to earn 5% from their first account. So that difference in contrast sets us apart. And when you're doing your research and you realize that this trader just started trading 2 years ago in London, now they have a Lambo, you wonder, how is this happening? But then there's, of course, that difference in terms of financial position, where you are starting versus where they are starting. But in terms of skill, you are probably even better than that trader.
I was listening to a podcast recently where it says in US, there is almost similar numbers of hedge funds as it is of McDonald's.
Yeah.
That tells you the level of financial literacy there, and I think risk taking that a lot of people are doing. And if you go to YouTube, I think it's one of the greatest universities that ever made, whereby you will find a lot of these people within finance. They do teach you on the basics of how to invest, so you learn about that. And then there is the other aspect. You know that you're taking risks, and therefore you make sure that whatever capital you put in, it is not like it you need it back immediately, but you are allocating it appropriately in a way that it will serve you for years to come, not just today, tomorrow, so years to come. So for me, what I adopted from that is that, okay, I know what I know. I have this amount of money. I intend to maybe do the dollar cost averaging every month, but also constantly try to see what else can I do to make sure that whatever I started with does not get blown out. And whatever I'm trading in, I understand it better. If you need to specialize, I think I must mention that if you need to specialize perhaps in a certain asset class, it would do you good to specialize in it. You know which times you will be getting in, how much you need in it, and of course, what affects its price action.
Well, I have an objection on that. Okay, personally, I'm not a person who is pro specializing in a certain asset class. Depending on your strategy, because if you're a volatility trader, an asset may be, let's say, 4 weeks or even 4 months trading sideways without any volatility. So in that case, you hunt for assets that have volatility. So today you might be finding volatility in USDN, tomorrow it's in an index, the other day is in gold. So for you, it doesn't matter what asset class is. What matters is where the volatility is headed.
How do you handle a loss, and how do you maybe get yourself together to make sure that it doesn't happen again, and obviously it doesn't affect how you plan your finances?
Well, I normally go outside and touch grass. So it's a common term that we normally use in trading. So it doesn't mean the literal sense of going outside and touching grass. It basically means that if you happen to experience a loss, you know that that can be quite emotional. And the natural impact or the natural reaction is to try and get that money back. So if you lost $100 today, you want to get that money back in your account today. And that can lead to a lot of mistakes. So in that case, you might find yourself justifying a trading opportunity, even if there was no trading opportunity, or even trading a higher lot size, breaking out of your risk management plan and all that. So instead of falling for all that, just close your machine or your trading application, go do something else until your mind is sober enough to think in a critical way when you're entering the next trade. So when you say go touch grass, that's how I basically handle my losses.
Let's say, that's good. And then obviously on a positive note, say you have made a very good week, probably 50% of your initial capital from Monday. Do you remove it and say this weekend the Nairobi night scene or do you become objective now and logical? You try to diversify or invest in other interesting features that you.
Well, back in the day I used to do that, so I would literally celebrate my profits. Right now, it's more of a mental thing. So I want to reward that behavior in myself. So if, let's say for the week, I've made some significant profit and I felt this was well deserved, I'll take a small chunk of that profit and then do something valuable for myself. Could be giving myself an experience. I wouldn't want to describe the experience on the podcast,
Yeah.
but something that makes me feel better,
Yeah.
which would basically train my brain to observe those patterns again next week, or identify similar trades, or practice the same discipline come next week. So I want to reward myself for that, so that the brain internalizes that and keeps on doing that again and again and again.
There is this other aspect. I think I will not let this go without mentioning. I've seen a lot of traders, after you have sort of mastered your craft, you have your strategy in line and in check, you have your assets in line, you will find they get onto something like maybe programming. If they are not within the programming space, they do that. If they are maybe within finance, they go for something like maybe CFA or some masters to ensure that you increase your acumen in the craft, and therefore you become, say, a full professional financial markets operator, not just a Forex trader, but now you are everywhere in the market and you know what to do. So maybe during the day, you are in the chart of currencies. In the evening, you are dealing with options or maybe US CFDs or cash equities. And then maybe in the middle of the night, you are doing some crypto, something, or mining or something. So I think it's also important to not only just take it as a way of earning money, but also improving not your knowledge, but also your skill to make it work for you in the long run.
Yeah, it's called alignment. I think that's what my personal story is all about. Like on one side, I'm working as a market analyst with FXPesa. So by analyzing the markets, writing articles, going for those, let's say, media interviews. So I'm basically looking at the same charts that I use in my trading. So when I do analysis, this is when I gather insights. When I do research, when I do presentations, when I do trainings, when I do the pips and branch events, I'm always gaining these insights about the markets, which I would not have gained if I was involved in a different activity. Yeah, it's also a part of what I've been advocating for a long time, have a secondary source of income. So once you have a secondary source of income, you'll not be able to, or you will not be projecting your financial needs to your trading account. So you'll know that my bills are paid, my rent is paid, my my food is paid, and all other bills that you may have. So in that case, when you are trading, you are in the flow, you're in the process. You're not trying to project your monthly rent from your trading account. So in that case, you go easy on the account. Yeah.
I think that's a good place to end it. For those who will be listening to this, I'm sure for traders, you have your own experiences. Perhaps you could add your comment, of course, or your how you deal with your day-to-day, January to December, 365 days in a year, looking at the same candlestick shapes, pattern, and movements. Hopefully, what we have discussed can give you insight, especially for beginner traders. I've been your host, Jesse. Feel free to interact with me or Rufas on our X and obviously all social media platforms.
I would like to thank our listeners. Make sure to subscribe to our channels. And of course, if you'd like to open an account, make sure to check the comment section or the description. You'll see the link for opening an account. So parting short, I would like to send a question to our listeners. What's the biggest challenge that you're facing as a Forex trader? And based on your responses, perhaps you'll be able to craft a new episode trying to resolve those challenges.
Adios.